On today's Hot Sheet, I'm discussing Jerome Powell's statements on tariffs, Canadian lumber and home builder stocks, and the states with the highest house flipping returns for the year of 2024. Today is Tuesday, April 8th, 2025. I am Byron Lazine, and the Hot Sheet starts now. Good morning, live from Naples, Florida. Let me know in the live chat which market you are tuning in from, wherever you may be today. Sorry about the late start here on the Hot Sheet. I was very busy, but I was also looking at this stock ticker. I mean, who would have known yesterday when basically we ended the Hot Sheet, all of a sudden Black Monday was over. As we were ending the Hot Sheet yesterday, Black Monday was over. And then look at this today. I guess you can't see that when you don't have it plugged in. But look at this now. There's now a rally in the stock market. The wine for 2 days, 3 days, stocks go into a little bit of a sell-off. Still 100% more, S&P 500 up 100% for 5 years. People were acting like the stock market wasn't going to exist anymore for 3 days. The little stock boys were crying. 3 days of a downside market for the stock market, and the crying and hysteria that was going on was unbelievable. I mean, real estate people, we are way tougher than the little stock boys. I mean, this is just, we've been in a real estate recession for 2.5 years. Okay. Just 3 days. 3-year real estate recession versus a 3-day little sell-off for the stocks. And look at now they've got their rally back. Look at this, up 1,200 points on the Dow today, 3.17% up. I'm not saying that anything's going to the moon. I'm not calling Dow Jones 50,000 or anything like that. But why is this happening? Why are all of a sudden, I thought the end of the world was coming. I thought the tariffs were going to basically push us off of the globe. I thought tariffs were the end of the world, money, economies as we know it. Well, all of a sudden now there is belief from investors that tariffs are a negotiating tool. Wow. No, really? Negotiating? So all of a sudden now there's at least a belief with investors, more of a Scott Bessent following Secretary of Treasury as opposed to a Howard Lutnick following Secretary of Commerce, that we're going to be, America, the administration, or whatever you want to call that, is going to be more open to negotiations. There's going to be conversations that are had. That's kind of like how I thought about tariffs the entire time. And so this message is impacting investors' decisions right now. You know what else it's impacting? It's impacting where they put their money. And all of a sudden, the last 24 hours, really since we signed off of the Hot Sheet yesterday, they're not putting their money in the treasuries. They're flipping it back to equities. Dow's up 1,200 points this morning. What does that mean? 10 years at 4.239. We were under 4 yesterday before we started the Hot Sheet. That was a great moment of time. That was a really nice time to be alive. Not that today isn't. But 6.82 is where the 30-year fixed ended yesterday after 2 readings. First one came in at 6.75, then 6.82. Guess what? You want normalcy in the stock market right now. Rates are going to be higher on the 30-year fixed. Maybe that's exactly what you want, but that's going to be the trade-off. It's going to be very difficult to get both unless you crank up the money printing machine. What does Jerome Powell think about it? Well, let's take a look. All right. Jerome Powell talking about a wait and see approach. Those were the headlines. Resi Club put together a good piece on this. The dual mandate tracker, right? Every lens, every conversation that Jerome Powell and the Fed has to the markets, right? They're typically the Fed speaking to the market, speaking to these investors. It's going to be through the lens of the dual mandate. What's going on with employment? They want maximum employment. What's going on with inflation? Okay. As you look at the effective Fed fund rate here, I'll scroll over for those viewing on YouTube. You see we're at 4.3 roughly percent with that. We've been on the move down. We've been paused here for the last couple of meetings, but recently they have been cutting. 4.1 is the unemployment rate. We know that that's up to now 4.2 after Friday's news, and inflation sitting at 2.8. So all these numbers here outside of employment moving effectively in the right direction for where the markets want to see. Inflation's been obviously a little bit sticky. What is Jerome Powell saying, though, specifically about how these are impacted with tariffs? Let's go to Jerome Powell's comments here Friday. Looks like he's in a high school auditorium or gymnasium or something with this clip. But this is from Jerome Powell speaking on Friday. And this is at a conference in Virginia. Let's take a listen.
So you have several things there. The first is we just haven't built enough housing, and we haven't kept up with the demand for housing. So there's an underlying shortage. Before the pandemic, there was a real housing shortage. And by the way, that's happening in many comparable democracies around the world. The second thing is, lock-in, as you say. There were very, very low mortgage rates during COVID.
This is
locked in. It would be very expensive to move, and that'll of course.
This is talking about how long they'll hold on to low interest rates.
You also mentioned,
when my team pitched the idea, I thought it was
Haley. That was no good. Not Haley's fault, but Haley will get that commercial cleaned up. So what he's talking about here is actually how long they'll hold on to low interest rates. And so haven't built enough housing is always what he goes back to. I don't completely agree, because I think a lot of the housing that's going to get built is not going to be affordable enough for a lot of the people to move off of their mortgage. Second thing, the very low rates, people are locked in. It's more expensive to move. That'll wear off over time. He continues to talk about the wearing off over time. Let's listen to the rest of this, and then we'll go to some of the tariff commentary.
Costs of materials that might be imported, lumber and nails and things like that. And yeah, and also labor, a lot of labor from in the home building business has been traditionally immigrant labor. So yeah, the housing, the sort of new build market, it may face some cost pressures as well. That may very well be the case. That's what we're hearing from home builders, for example, both on the labor side and on the material side. But even once these short-term things happen, we're still going to have not enough houses. And so it's all, I think for a long time, we're still going to see upward pressure on housing prices, maybe until population growth slows or until we catch up.
All right. So there you go. He says we're going to, for a long time, see upward pressure on housing prices. This is one of those conversations I think is very important for buyers to understand. I was shared, I think, yesterday here on the hot sheet about a conversation one of my agents had with a friend / client over the weekend. The friend was buying into the hype, the hysteria, the headlines, the mainstream media saying the stock market is collapsing. And it was the exact text that she sent to her agent saying, hey, with the stock market collapsing, are home prices going to crash? Like, oh my God, people, please, like the stock market is not collapsing. I said it yesterday and somebody took note of exactly what I said, where it's like, hey, there's some of this money that we printed is burning off of the stock market. Some of these valuations might have been a little bit inflated to begin with. There's not a collapse. There's over 100% gains in the S&P 500 in the last 5 years. That's more than real estate. Okay. So to me, stock market collapse is it's super fearful. It's going to the extreme. It's a ridiculous statement. You see it today, obviously, with the rally. I mean, this is kind of, to me, exactly what Wall Street wants. Any excuse to have a 2 or 3 day pity party for themselves so they can jump back in on the rally and make some money. And that's certainly what they're doing here today. But there are going to be buyers that have these concerns, like just go from one extreme to the other and have these fears. And Jerome Powell, the head of the Fed, said it, I think, basically in plain English there. For a long time, we're going to see upward pressure on housing prices for a variety of reasons, for all the reasons we talk about here on the hot sheet. It's important to help buyers understand that. I mean, 2 days ago, this weekend, when we were talking about what the stock market was doing to home prices and worried about a home pricing crash, if anything, it was going to be quite the opposite when we were seeing the momentum on rates going down. Now rates are going up. You might actually have more flexibility on negotiation if rates get back up over 7%. Certainly not rooting for that, but at 6.8 yesterday, with where the 10-year is heading with the stock market rally, not great for rates. We had the momentum. We were getting close to 6.5, but we had a possibility of really moving down on interest rates. That seems to have dissipated here, at least for the next 24 hours. Certainly did yesterday and looks like it will today. But that was going to be more cause for more competition, those rates moving down. That was going to be cause for more buyers having more money to spend and more transactions happening. And so now we're kind of going back to what we've dealt with for the majority of the last 2.5, 3, the majority of the year, this year, where we're looking at close to 7. That's where we ended the day yesterday. And, that may put pressure on competition, but for a lot of reasons. 4 out of 10 home owners don't have a mortgage. Foreclosures at the lowest level. Inventory, while being up, we talked about it yesterday, from the last few years, nothing like it was in 2015, not even close, hundreds of thousands away from where we were in 2015 or 2014 during the recovery years and post-recovery even. And so there's a lot of reasons there's going to be pressure upward on prices, not downward. And the stock market isn't going to have much to do with it. But going back to tariffs and, kind of this, concern that certainly seems to have kind of all of a sudden, just in time for the stock boys to have a rally today, has gone away with this indication that eventually there's going to be negotiations. There's going to be conversations. There's going to be deals that are done. I mean, I don't know why for a week everybody forgot about that part. If you're going to negotiate, you're not going to come in and everybody knew this a couple months ago. Hey, going to talk tough and then negotiate. Well, if you go into negotiations saying, hey, I'm going to hold firm at this price, but that's really only going to last if you ask me enough times, I'll just drop it. Right? You've got a listing and you're still negotiating multiple offers or something from the weekend, and you go to somebody, it's like, hey, I told you I had multiple offers. That means 2, not 12. Is that going to change their offer here? Is that going to change how they negotiate with you as the buyer agent? Like, why would you show all your cards? Would be pretty silly to do that. But Jerome Powell is just kind of doing a wait and see approach. He's waiting and seeing because he's not going to go to one extreme or the other right now. And I think that's probably smart, as long as he doesn't wait and see too long like he did when inflation was obvious, when he called inflation transitory, when he convinced the government, Congress, to print an extra $2+ trillion when COVID was well in the rearview mirror. He said, hey, Congress, last chance to get another hit, another dopamine hit, another hit of that sweet money printing drug that Congress loves so much. He convinced them to do it and kind of let that ride for a little bit too long before realized and admitted, oh, inflation's not transitory. We got to start doing something about it. Hope he doesn't wait too long this time, but saying, hey, it's too early to determine what the central bank's response is going to be. He acknowledged potential marginal increases. can happen to inflation. Here's his prepared statement here. Let's start with the fact that incoming data right now, this morning's employment report, that's talking about Friday, and we covered that yesterday, shows a solid economy. Keeps talking about a solid economy. Not a lot of people, whether it be 2023, 2024, or now into 2025, even with a new administration, believe that the economy is solid. But the way he looks at solid economy is jobs are there. There's inflation moving down. There's GDP growth. Those are the ways he looks at it. That doesn't really work out that way for small business Main Street, the people that you're going to be speaking with this afternoon out on home tours and listings and consultation conversations. Unemployment's still low. I understand the uncertainty that's weighing on people, but we don't make the probability of how likely it is that there will be a recession. Okay, so the Fed isn't making that probability. We've seen outside forecasters do that. Those numbers are up, but they're not like at 90%. I think the highest that we're seeing is bouncing around from 40 to say 45, 50%, that there will be a recession. That is up just recently with the tariffs from 15, 20% is commonly where the probability of a recession forecast was coming in. Well, now all of a sudden that they're going to, and they, meaning investors, remind themselves that, and tariffs might be a form of negotiation. You see that with the rally. Do those recession fears move down? Typically, as equities are moving up, all of a sudden the recession fears move down. They might be down to 25% already today. I mean, the extreme volatility of bouncing back and forth, ultimately equates to nobody knows what the hell is going on. I think that there's the fact that the markets didn't move down more and now they're already moving up should be an indication that, listen, you just go back a couple months. The belief was always that there was going to be some type of negotiation, and those deals haven't come to, come together or anything like that. But there is a belief that that's what's going to happen. Going back to Powell, many of them have raised the likelihood, and this is the punchline here. They were from very low levels. Okay. So, he's saying that a recession is not now something anybody is forecasting. So when they raise the chances of a recession, that's all they're doing, raising the chances. Nobody right now is forecasting definitively that there is absolutely a recession. Some people are starting to say it's a possibility. There's not much more he can say about that. What we've learned in the tariffs is that the uncertainty is higher than anticipated, and higher than almost all the predictors would have suggested tariffs would come in at. Okay, there again, we try to stay as far away from the political process. That's except when you're convincing Congress to print trillions of dollars that we really didn't need, that caused inflation. But other than that, the Fed stays out of the political process. We don't look at political cycles. People expect that from us. Yes, we want the Fed to be down the middle, not biased, not being pulled left or right in any direction. They expect us to tell the truth. We, the people, do expect the truth. Yes, we would appreciate that as well. And that's what we're going to do. At the same time, we don't want to be a part of the broader discussion about policies that are not assigned to us. We're not responsible for trade, immigration, fiscal. They're also, and Jerome Powell said this many times, they're just not responsible for home prices, nor do they care, because their dual mandate, remember, is maximum employment and getting inflation down. Okay, so those decisions, they've oftentimes punted decisions about housing to others. It's not of a concern of theirs. What we use our tools is to achieve the goals that Congress assigned. And I just mentioned what those are. Okay. So over time, they want to be a source of calm, rational analysis, stability. The new administration is making significant policy changes on trade, immigration, fiscal regulation. You're still just a couple months into the administration. That process will take place. And so on and so forth. So Powell sticking to the dual mandate, no decision coming anytime soon. The CME group yesterday, after, again, there was all this hype and fear and extremism the last few days of the week last week, which leaked into the morning of Monday, which was supposed to be a Black Monday. The markets went up. Who would have? I've never seen a Black Monday where a whole bunch of stocks are going green and doing well, but that's actually what happened yesterday. CME group was saying 50-50 chance that the Fed yesterday would actually make a cut. That has totally gone away. Okay. Now we're back up near 80% chance that the Fed does nothing. So Powell's comments on Friday, along with this now investor mindset that, tariffs is not going to be that bad as we made it out to sound. All of our crying and whining was just a 48 exercise to act like toddlers. Okay. That's not the case. 80% chance that the Fed does nothing. I'm not saying that that's the right decision. Certainly the White House would disagree. This is not what the White House wants. Now, I think the White House doesn't want the stocks to just completely, collapse as that buyer suggested that they were over the weekend. They don't want to see a stock market collapse. What are we, a year and 9 months, 10 or a year and maybe a half almost away from midterm elections? You have a stock market that does nothing go down, then this administration will lose all of their leverage in terms of the House and the Senate. Of course, the new administration, most of the times you'll see that anyways. The administration comes in, midterms, voters go and even it out. You see that a lot, but that's not the plan of the administration to lose the House and the Senate. Stock market continues to go down. They know that it'll be basically an improbability of them winning either if the stock market keeps going down. So of course they want the stock market to go up, generally speaking, but they really wanted this number. You listen to Scott Bessent, Secretary of Treasury, they really wanted this number to keep moving down. Now all of a sudden not happening. Your 30-year fix is going to be near 7% today, when we were pretty close to 6.5. That's a half a point swing in just a matter of days. We'll see what happens here. End of the week, we probably won't have much data on it. It'll be reflective more of last week, but we'll see over the next week, 2 weeks, what that does to mortgage application. We'll start to, get our view in here to the rest of the spring market on that. All right. Let's just take another look here at some of the other data points that Rezi put together for us here on tariffs. Number 2, that initial reaction, the 48-hour, the pity party from the stock boys. The S&P fell 10%. Well, it went up 135% in the last 5 years. Like, my God, really? I mean, we acted like the sky was falling. And the futures market on yesterday was predicting this Black Monday. Markets are up now. Okay. So, up from that point that we signed off yesterday and now even into today. So there's a little bit of a mini correction happening as they overcorrected last week. Home builders have less pricing power right now to absorb price shocks. Okay. They're at the highest level of completed unsold homes since July 2009. They're sitting at 119,000 today, which is, by the way, that is, you get up over 120,000, which they're basically at that number. That's where they start to have a little bit of concern on unsold completed homes. So, losing, in 2009, they were at 126,000. Of course, 2007, that number ballooned up over 180,000. But this is the highest level since the mortgage crisis that they've been at for completed homes for sale. So they certainly have less pricing power. Their margin is shrinking because of the concessions that they are forced to make. Okay. So, and this is going to be prominent in areas like the Austin Metro and, think, Southwest Florida. Home builder in Southwest Florida, prices are falling wouldn't be able to pass along any price increase. You talk about Connecticut or New Jersey, any home builder who's building there is going to have a really easy time getting the property. So they're not going to be sitting on unsold homes. There's no inventory in those states. Okay. Only 7% of new residential construction materials come from abroad. This is important to remember. I had a conversation on local radio up in Connecticut last week when I was up there. Somebody said this on the show, said, well, building materials are going to go up. I said 10%. So I was being conservative. Only 7% of new residential construction material comes from abroad. And, we're going to talk about Canadian lumber here in just a second, but the lumber or the materials, not that big of a concern. Look at this, 190 billion come from the US, 14 billion imported from outside the US. The national home builders have pricing power because they buy this in bulk, economies of scale. And so you're not going to see in the near short term much of a issue with tariffs on new construction building materials. Okay. The numbers are just too small for the national home builders. Okay. They wrote 204. This is coming from NAHB. All right. They wrote the 204 billion worth of goods for both multi and single were in the US. Okay. So you're not going to really feel it there. The modern US economy, though, would certainly feel a trade war if it were to come to that. And, that could impact, obviously, our growth and all of that. Imports, a share of U.S. GDP, 5.2% back in 1970. Today, it is 14%. So dealing with much different times. And then, obviously, as everybody continues to repeat, ultimately how tariffs play out is pretty unknown. There's a lot of economists that have undressed themselves over the last week as a partisan, either on the left or the right, depending on what they say. I never realized how many economists are just true political pundits and really do not play it down the middle like a Danielle Hale does for Realtor.com, like a Logan Mohtashami, who's an analyst, plays it down the middle and isn't taking a political side, which Jerome Powell claims that he does. So it's unbelievable how many economists will tell you exactly what's going to happen, but ultimately the right answer is nobody will know. What is happening right now is what we thought last week, a tariff on Canadian lumber was exempt, has now kind of done a little bit of a flippy floppy here. Realtor.com reporting tariffs on Canadian lumber are set now to double. Surprise move. A lot of surprise moves happening lately, which is creating this level of uncertainty and maybe supported that pity party from the stock boys. But here for Canadian soft lumber, the U.S. is preparing to raise duties on Canadian softwood lumber to 34.45%. And it's up from a level of 14.5% last year. Now, I just want to explain real quick. We hear these numbers and I don't hear many people explaining tariffs. So so if you were to buy lumber from, in the US, the Home Depot or, wherever, Lowe's or somewhere, your local lumber yard, I'm just going to use simple numbers here, but if there's a piece of lumber for $1 and there's a 34.45% tariff on it, it does not mean that piece of lumber is $1.34 now. Okay. That lumber goes into, when it's sold, there's some type of distributor that is going to buy the lumber and then distribute it to places like a Home Depot, a Lowe's, your local hardware store. Well, that tariff is on the cost of goods. Okay. So the cost of goods, they try to keep as low as possible. Whoever's making this softwood lumber from Canada, as an example, when they sell it to that distributor. There's like middlemen, okay, between whoever's making the lumber and Home Depot. Well, before it gets to those middlemen, that's where the tariff is placed, like as a toll coming into the country, and it's on that bulk purchase. That is a much lower number than what you see at the store. So you can't just say $1.34. It's not going to be that. But it's still obviously going to potentially, obviously be a higher price if this sticks. Canadian lumber is a key input for American builders, according to Realtor.com, even though 7% of our materials is from abroad. Overall, not a big number, but Canadian lumber apparently is. You're seeing stocks for DR Horton, Lennar, Pulte, Toll move down. Okay, they moved down 3.5% and 6.1%. We'll take a look here, right, what they are today with this news on the lumber. Tariffs are the clear culprit for stock market pullback and fears of recession, says an economist with Realtor, Joel Berner. Recession risk is especially up for builders who rely on the strength of the labor market to produce buyers for their new homes. And so those are kind of generalities. I don't know that necessarily agree with, the problem with builders is where they're priced right now. And so they need a higher end buyer to buy their homes anyway. But here's what the actual home builders are saying. Lennar president and co-CEO. To date, we have had no impact to our costs from tariffs. We'll work closely with our trade partners if further tariffs present themselves to mitigate and offset cost impacts. Okay, that was back on a March 21st earnings call. Now, this latest round of tariffs may increase some of these materials, like what we're seeing here in Canada. And Mark Zandi over the weekend raised outlook for the odds of the recession. This is the highest I've seen, from 60% from up just to 15%. He was at 40% last week. Maybe today with the rally, he'll move back down to 40. He'll just keep flopping around. And so there you go on what's going on with the Canadian lumber tariffs. This obviously could change. I think if there's going to be the investors obviously believe there's going to be negotiations on tariffs. I would imagine if there's going to be negotiations, one of the first countries that there's going to be a deal struck with would be our neighboring countries. If I'm guessing, I don't think it's going to be China. I don't think China is going to be one on the list. It's probably going to be Canada. It's probably going to be the EU. It's probably going to be Mexico. It's probably going to be, some of those, maybe India. Okay. Those are going to be more at the top of the list. And I think Canada would be right up there if I was placing a bet, near the top. So this may go away. It may obviously stick. There's a lot of unknown there. But let's just take a look at kind of how the market is reacting to Lennar. Obviously, the markets are up today. Lennar being up with them, up 0.87%. Last 5 days, Lennar's lost 4.7%. Now, year to date, Lennar has been down as home builders have near 9 months, 8.9 months of inventory. That's the biggest issue builders have faced here over the last year. Over the last 5 years, they're up 160%. So builders have done quite well over the last 5 years, outperforming the S&P 500 by 30%, 40%, something like that. If we look at now, let's look at, Pulte stock. Just take a look at what they're doing today. Pulte's up 1.13 today. Year to date, they're down 10%. The last 5 days, they're down 4.6. So all builders kind of duplicating. If we look at, the last 5 years, they're up 269% over the last 5 years. All right. Builders have done quite fine, just like the S&P 500 is. You always got to put that into context. It's like one day of loss. Look at what the real estate industry has been dealing with. 1 day of losses, not the end of the world. What has been the end almost of the world over the last couple of years for home flippers is opportunities. Well, we've got data now from Adam on the top 10 states with the highest home flipping returns over the last year. And some of these states might surprise you. Okay. Number 10, New Jersey, no inventory, but the percent of return on investment puts them in the top 10, 3% ROI in 2024. That's a 150,000 gross profit in 2024. Crazy there. New Jersey, low inventory coming into the top 10. I would have guessed high inventory states where you have the ability to negotiate would have been, to me, the top picks for home flipping. I mean, like, I haven't touched a flip in Connecticut in 2-3 years. I mean, it has been a minute since I've even looked at a flip up there. Like doing flip, all that, just the opportunities aren't there in a low inventory. And the people that are bidding on flips are crazy. They're out of their minds on where they're going with some of these numbers, or they're just doing, like, I don't want to do crappy work. I think that's the other thing. I'm not going to put lipstick on it just to, just to turn over a deal. Michigan comes in at number 9, 8% ROI in 24, 71% gross profit. Virginia comes in at 120% gross profit in 24. Illinois, 90% gross profit. Tennessee, 100% gross profit. Speaking of Tennessee, Gary Ashton, who runs the number 1 team worldwide for Remax, coming on Knowledge Brokers podcast on Friday. He's in Nashville, Tennessee. That's why I thought of him. He's coming on Knowledge Brokers pod. Subscribe over to Knowledge Brokers pod, separate channel, so you don't miss that. Kentucky comes in at number 5. Louisiana makes sense. A lot of inventory. Okay. So if you can come in, negotiate a great deal in a place like that, somebody's buying a house, it's move-in ready, it's perfect. The work's been well done. 65% ROI. I mean, you can get deals in Louisiana. Makes sense to me. Maryland, Delaware, and then Pennsylvania. That makes your top 10 there for house flipping opportunities for the last year, where the highest returns were in the U.S. So I would have guessed. I mean, I guess there's just too much new construction to make sense for a house flip, Florida, Texas. So, I guess that makes sense to me. I would have leaned into higher inventory, but I guess with how much new construction there is there, you're not going to see that. All right. Here's where we're sitting. US 10-year. I mean, get ready for close to 7% rates today on the 30-year fixed. For those that have been, hoping the tariff concerns go away quickly, well, they have. Investors are speaking. They're not that worried about it. They're moving their money out of safety, causing the 10-year treasury to go up, and the 30-year fix is going to move up today. So there you go. Can't have your cake and eat it too, unfortunately. 6.82 yesterday on the 30-year fix. Expect that to move up today. Spreads also not helping us out. That's moving up. 30-year fix, probably close to 7. We almost had it down to 6.5. Wow. Would have loved to have seen that. To get the most out of what we do at BAM, the free and simple ways, just click subscribe and hit the notification bell here on the YouTube channel. If you're listening to the replay on Apple or Spotify, love to get a review from you there. If you want more and you want access to data and social media templates, email scripts, all of the stuff that you can use to communicate at a higher level, whether it be socially or inside of your database, join us inside of BAMX. That's how you get the most out of what we do here at BAM. If you want access to the show notes from the hot sheet, it lives inside of the hot sheet classroom, as well as all of the slides that I use on the show each and every single day. Here's just an example of today's slides. As an example, you click on one slide and right down here, whether it be on the mobile app or your desktop, you can click download. All available, as well as our hot sheet show notes within the hot sheet classroom. Going back to the classroom, you get new data, social media templates each and every single week, along with our hyper local content, adding in so much more hyper local content each and every single week on your Friday drops. Here is just an example of what we did this last Friday. There's so many in the community saying this was the absolute best drop this last Friday. I just scrolled through just the social media drops in 1 week, along with all the video scripts, email scripts, and blogging scripts. The email scripts are crushing it. We're seeing just my own team doubling up on open rates from 15 to 18% up over 30% with these subject lines and this content. And that's with a data, that's like 60,000, people in the database up in Connecticut. So that's a big list to drive and jump up those open rates that much. But using the right subject lines and the right content is the reason for that. So go to school.com/BAMX. On April 23rd, you will see BAMX prices move up. All of our current BAMX members are grandfathered in at their current rate. On April 23rd, these prices are going to jump up. Why April 23rd? We're going to be celebrating BAM Fest, a free virtual event open to everyone. BAM Fest is coming up later in April. We do have a mystery guest who has been asked multiple times to be on a public-facing real estate stage. Never done it. Is going to be on the BAM stage, public-facing, free event. You don't want to miss that. Jimmy Burgess talking about the YouTube blueprint, which Jimmy Burgess has really figured this out, how to attract ready to buy clients while you're sleeping, have your YouTube channel working for you. I'm going to do a fireside chat with Veronica Figueroa from EXP, one of the brilliant team leaders of our industry. And again, that surprise guest, myself and the broke agent, will be moderating the entire event. We have entertainment as always, a little DJ entertainment here for BAM Fest. Can't call it Coachella because they'll send you a cease and desist. We used to like the BAM Cella name, but they said, no, can't do that. Here's a cease and desist. So it's BAM Fest. All right. Make sure you sign up to that now, bamfest.com, totally free. And we'll see you over there. That is when BAMX prices will move up. If you get in today, you're going to be grandfathered in for life. All right, there's your hot sheet here for today. And we'll see you back here later on in the channel. We'll have a new Real Word podcast. And we'll see you back on the hot sheet tomorrow, 9:30 on the East, 6:30 in the West. Till then, toodaloo.